Today's video is all about Goldfinch, real yields from real companies. Today we're going to be doing a deep dive into this project, looking into the team, the tokenomics, the utility, and the overall value proposition, figuring out if this project has what it takes to make it to our portfolio for the up-and-coming bull run. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And the question is Goldfinch an opportunity? Today, we're going to be doing a deep dive, looking into the project, figuring out if it has what it takes to make it to our portfolio for the up and coming bull run. What does that mean? We're going to take a look into this project in a bit of detail, and we're going to be looking at some of the important aspects of a project and doing a deep dive into this project, and ultimately being fundamentally bullish. What we want to do is get fundamentally bullish so that we can prepare accordingly. Should we be buying the dips? Should we be scaling in? Should we be accumulating? And of course, Goldfinch is definitely one of those projects that are on many individuals' radar. We're definitely going to keep an eye on this. All right, guys, let's begin. Let's use the website. We're going to be using the website as our main platform to navigate this project. So this gives us an opportunity to also reflect on the website itself. If the team is doing a good job giving us what we need on these websites, I'm coming from a retail perspective. I'm coming in doing this deep dive from a retailer perspective, a retail investor perspective. Why? Because the majority of us are coming from that space, from that, from the retail perspective, and ultimately that is how we can get an indication for mass adoption. In order for this project to get mass adoption, it needs to have the retail investor. So let's see if it keeps the retail investor in mind, and then we'll go forward. All right, let's begin. Let's kind of see what's going on here. We got a few tabs here at the top for investors, about, we got community, governance, and so on. So we'll talk about these tabs in a second, but let's just scrape through the website real quick. Stop worrying about crypto money games. Start lending your USDC to real businesses worldwide. Okay, that's fine. So I'm sensing a lending, borrowing type of scenario here, a DeFi, and I'm also, obviously part of the real world asset narrative, and we know that's a very, very hot narrative in the last little while. Goldfinch has definitely been, prospering based on that narrative. We do have a senior pool APY at 7.6%, fairly high, and of course we need to kind of define what the senior pool is. Active loan value, so this is how much activity they have in the sense of how many loans do they have out there. 30-day protocol revenue, so we can see that the protocol itself is earning already, it's in revenue. So considering that it is a business, at the end of the day, at least this business is profitable. Really good stuff there, at least. Goldfinch deals, explore Goldfinch deals. Goldfinch yields come from real world lending, so the real world aspect of things, and investments are collateralized off chain, which makes them distinctly different from highly volatile DeFi lending you may be familiar with. So let's talk about this for a second. So traditionally, if you look at other projects that do this type of thing where we can get loans and so on through lending, and we can provide liquidity to the lending pools and stuff, but usually what we're talking about here is using collateral that is crypto related. So using collateral such as Bitcoin or some other projects, even Ethereum or whatever it is. Just understand that those collateralized assets also are volatile. We know that Bitcoin, Ethereum, and all the other projects out there, they have volatility. So what happens here is that we have to over collateralize, right? We have to over collateralize to provide a little bit more liquidity so that just in case there's volatility, the collateral will cover the loan essentially. So this is one of the things that we are, they're trying to differentiate themselves from, is using real world scenarios, real world assets to collateralize the loans rather than over collateralizing crypto assets or crypto collateral, if you get what I mean. Okay, so this is an important thing because then it kind of ties into the real world asset type of thing, type of environment, in the sense that if you're a business and you're looking for a loan, you don't have to provide cryptocurrency, some sort of cryptocurrency for collateral. You can actually use the assets you have within your business to act as collateral, which is quite interesting, right? So Because if you think about it, really, if an individual were to have, let's say, the capital via crypto to act as collateral, and that way, why would they be looking for a loan if they had the liquidity? Maybe they could double down, of course, that's an option, but wouldn't it be more useful for you to be able to use your existing assets, whether it be machinery or whatever the case may be, depending on your business, to access some liquidity from using those as collateral, which I think is a lot more accessible for businesses, because what they're really looking for is liquidity. They need capital, right, to grow their business, and to lock up capital is kind of counterintuitive if you think about it. You're locking up capital, basically cryptocurrency, to get more cryptocurrency, where in this case you're locking up, let's say, your physical assets to gain some liquidity or some capital, which for me is a lot more convenient. Okay, so that's a lot more accessible to businesses. You're in good company, so that's good. We got a lot of individuals here. Who do we have here? Some individuals giving us a little bit of feedback about the company, which is good, backed by visionaries. Of course, we have Anderson Horowitz, a big VC out there. Coinbase, of course, Coinbase Ventures, big VCs, lots of VCs happening here, as you can see. SV Angel, Access Ventures, lots of venture capitalism all up in this, which means that there's going to have to be a little bit of focus on tokenomics. Okay, we're going to have to look at the tokenomics and see how exactly these individuals are going to be compensated, because the reality is the majority of these VCs, I guess, yes, they're in it for the long run. They're going to say that they're in, but they're in it for the gains. We got to be real. Why are they here? Their core business is to get into very high yielding, potentially yielding businesses and profit and walk away. That's the reality. They're not holding this for a long-term investment forever and ever. So we got to understand that these people, their main business is to get in, invest, and get out. Put your stable coins to work. Use DeFi's global credit marketplace to harness sustainable APY from businesses creating real value in the world. Optimize for yields. Okay. Sustainable yields. I like their website. Their website design is pretty good. It looks a bit old school, kind of like that. And given that the name is GOLDFINCH, you have this gold rush type of feel, these maps and these, tiered pages. So I kind of like their style. Usually I don't focus too much on style because it could be distracting, but so far it's somewhat tasteful. I kind of appreciate it. The early bird gets the alpha. I get it. Sign up. You can get their emails or their weekly updates and so on. Backers invest directly in previously exclusive deals. Of course, they're going to have exclusive deals with individuals that are looking for loans. They're looking for liquidity, and if you provide them that liquidity, you will be earning, essentially. An automatic high yield portfolio in one step. Deposit in a senior pool to automatically diversify your investment across Goldfinch borrower pools. So there's a bunch of borrowers looking for liquidity. If you provide your capital, your USDC, into this senior pool where borrowers can pull from, you will get rewarded. That's how it is. You're just offering your capital for these individuals to pull from, to use. And of course, the APY and all of that is there to reward you. Incentives to match your needs. Community driven incentives match your participation needs. Earn more GFI by staking. Staking FIDO, which we'll talk about in a second, for participation in the senior pool, or get a bonus as a backer. So there's a difference between backers, and I think that's a very important thing, because it has to do with their structure of the tech, essentially. There's a difference between the backer and the senior pool members, basically, and those individuals are basically rewarded in different ways. And we'll talk about that more in a second. Let's see if we click this, open up a new tab, if it gives us what we need. Protocol and high yield one step. That's pretty self-explanatory. These are some examples of some borrowers, I guess some businesses that needed some capital, and they were able to use their current existing business to use or their physical assets to put them up as collateral, and then individuals were such as you and I can go and provide that liquidity for them to borrow, and we get APY. I'm just trying to keep on emphasizing exactly with the use case here and the utility of the project itself. So they got Faz. These are great success stories. Item Capital, couple good success stories of which they were able to access the liquidity and do their thing for their business and succeed, which is a very non-traditional way of obtaining capital for a business perspective. So it could be very enticing. I think this could be the future of how we, raise funds. Essentially, Goldfinch is doing what DeFi was always meant to be. So Goldfinch is a credit protocol for tomorrow, build on chain with interoperability and access for all. It's built on Ethereum. It's an Ethereum-based project. So, as we see the interoperability aspect of things grow across crypto, it could be the case that, we have a very fluid existence from blockchain to blockchain. So the interoperability aspect of things is being worked on currently in the crypto space. So pretty good. Read our manifesto. Feel free to do that. Help transform lending worldwide. Okay, good stuff. You can apply for different jobs if you're interested, if you're looking for employment. And then to the footer. The footer most often has the majority of the great links that we're looking for. So we have a white paper, which is a typical PDF, but I found their active docs that gives us a lot of information as well. But we can open this up in a new tab. Governance, let's open that up in a new tab, see what we have. The GitHub, if you want to get, some access to some of their developments. The dev docs, if you're a developer, contact, okay, careers. The Discord, which I went on already. And yeah, there's a bit of a chat that we need to have there. We'll get to the social part of things in a second. Find us on CoinGecko, of course, they're all there. I think CoinMarketCap doesn't have an updated metrics. Their metrics are off, so be careful out there, guys, relying on either or. The most often, CoinGecko is a little bit more accurate here in most cases, so be careful about using CoinMarketCap, but it's still a very viable source. I just felt that some of the metrics are not accurate there. DeFi Llama and Dune Analytics, you can go check all their on-chain metrics and everything on Dune Analytics, which is pretty good. If you want to get into that detail, guys, I'm going to keep it very simple for the retail investor trying to get, an idea of whether this is a bullish project or not. That's all I'm really doing here. And of course, I'm always trying to be very neutral and unbiased, even though I do feel Goldfinch has a lot to offer. We need to be very critical about every little thing. Okay, so we got Twitter, which needs to be updated to X. And Discord. I don't see anything to do. Oh, Telegram down here. Okay, Telegram. Sure. If that's your thing, of course, Telegram is a hot place to connect with communities in the crypto space. All right, guys. So I got some tabs. Let's go through them a little bit. I also have the top menu that I kind of just scooched by. I'm wondering if there's anything important up there for investors. About, overview, mission, the docs. That's what I have already open. We'll go over that. Maybe the overview. I wouldn't mind looking at the community. I already got that done. Let's open into governance because it is a DAO, and then for investors. So we got a few tabs that we want to go, but I'm going to go through them real quick to kind of see what's important or not, right? So right here we have the docs, which I want to go through in a second. Let's do that. I just want to go, this is the white paper. It's a PDF, full-on PDF, a lot of technicals, a lot of repetition. You'll see a lot of this on the docs. So I'm going to stick with the docs because it's a lot easier to navigate, and it has a lot of the information there, and they're both pretty much written at the same time. I think they're both outdated. This is actually further outdated. This is 2021 written, right? Whereas the docs, I think it was last updated in 2022, which is still outdated. So what I'm going to do is just make you aware that there's an official white paper that gets into a bit of technicals. You feel free to go and look at that, but there is an active docs, working document. I'll show you that in a second. This is the Goldfinch Finance governance page. It's like a blog, let's put it that way. You can get on here and create different topics and requests and some general conversations about the actual governance of how Goldfinch is going to keep a run and any proposals that need to be put in place. So this is what a DAO looks like, and which is definitely a decentralized autonomous organization. Has a sense of community and all that. So you got to be a token holder, you got to be a holder, and you got to be staking it up so that you can get access and have voting power and access to this this overall community here. So it's pretty good. That's a good indication that they're trying to decentralize a lot of it. This is a duplicate duplicate of that, so we'll get rid of that. You guys, I'm doing this live here with you guys, so you can see exactly my process on when I do research. I kind of click around and find what I need as best as I can. This is investor, so we got experienced private credit union on chain. Okay, overall collateralized, fundamentally driven. So it gives you an idea. Borrowers can access millions of dollars loans from the protocol-driven success business, growth worldwide. Why? Because in markets, finance can be slow and expensive to obtain. We know this. This is a solution to a problem. Borrowers save by replacing inflated costs with efficient smart contracts and crypto liquidity capital. Guys, we know that this is a very hot thing. Non-speculative yields while unlocking the promise of DeFi's global access to capital. This is exactly what we need, because we now can play from a global perspective and basically balance out the supply and demand for lending money. That's the reality, right? So we can get the best deals from a global perspective. Have questions before you invest? Of course, report. You can go there and ask questions. I try to ask questions. Not much happening there, guys. I'm going to talk about the socials in a second. How GOLDFINCH works, guys. Take a look at this video. It makes things a lot simpler. It's very, very simple. Okay, which is pretty good. Put your USDT to work. We talked about that already. Compliance for architecture. This is what all participants conduct KYC. This is something that, for a lot of people, specifically myself, I'm not into KYC. It's not my thing. Luckily, I don't need a loan, right? But if I did, I would have to. If you went to any bank, you would have to provide ID and apply and all of that. So you got to understand that they're doing their due diligence to make this safe for investors, for people that are providing the liquidity for borrowers. We need to know who they are. They need to be audited. They need to be figured out. So KYC, KYB, and all the rest for investing and all of that needs to be done. Invest with USDC, a stable coin, fully transparent, backed by the real world asset, pegged 1-to-1. Guys, this is part of the Circle and Coinbase. Fine, we know that the USDC is somewhat safe. Obviously, there's no certainties in any of it. Just understand that right now USDC is one of those that, to a certain degree, can be trusted. Okay, let's put it that way. Borrowers provide an NDA gated data room. We're proposing a borrowing pool to the network, including historical performance, investment performance, transaction structures, deal specific documentation. So basically, this is what's interesting about this project. Okay, it's the borrowers themselves that are proposing the contract. So let's say I'm a business and I need a bit of capital. It would be me that actually offers or puts my needs out there. And then the lenders come out and figure out whether they feel like that deal is worth it. And then they provide the liquidity if they feel it's worth it, right? And that is an important thing, because usually it's the opposite, right? The lenders, the people that need the money, they go and they apply for whatever exists. In this case, it's the opposite. It's almost like the people that have the capital to provide as liquidity have to kind of like apply to the opportunities that exist. So there's a bit of a dynamic shift here, which I found very, very interesting, because ultimately it's in the best interest of the borrower to maintain a good relationship with this lending community. Because if they want lenders to give them money, their proposals have to be on point. They have to have a good track record. They have to have a good history, or else they lose access to this pool of lenders, people that are willing to give them liquidity, right? So there's a bit of a shift here. Whereas if you're not a good borrower, where you're not going to pay your bills, you're going to lose out, because nobody's going to be willing to lend you money in the future. And for that part, for the most part, this is where the backer role kind of comes in. Okay, we'll talk about the backer and all that senior pool stuff in a second. And that's about it here for this page. There's cool videos there if you want to go build the future with GOLDFINCH. If you want to go and read into this a little bit further, there's a lot of information here, which is cool. So let's get rid of this page. Back to here, we can look at tokenomics in a second when we go through that. This is the documentation. Again, I got another one. We got lots of duplication as I go through the website, which sometimes is okay, but for the most part, nah, you got to keep it clear. Now, roadmap. Now that I'm here on the roadmap side of things, I might as well talk about it, guys. I couldn't find a decent roadmap. Okay, and unfortunately, I even went on the socials, I went on the Discord to ask if there was one, and I was pointed here. I was pointed to this Altcoin outdated from 2022 proposal running active roadmap based on the DAO, which you guys know I'm very critical on roadmaps, and I'm starting to get very critical on many things because I'm noticing a trend with a lot of these projects that are not offering information in a very clear, concise way. They have to understand that in order to obtain mass adoption for the retail investor, the information needs to be readily available. That is their responsibility. Okay, it's not up to the it's not up to the individual. From a business perspective, it's not up to the individual, especially a retail investor should not be expected to dig through a bunch of documentation to find simple information. Okay, it's going to be, that's friction. It's a lot harder to obtain those retail investors and obtain that mass adoption. So I'm coming from the perspective of both the project team and coming from the perspective of a retail investor. There has to be a connection there, and both have to do their parts to make that transition or that communication as easy, as fluid as possible. And in this case, this is not acceptable. I expect the team to have a active roadmap, and it doesn't have to be precise to the day, because I know what happens when maybe proposals don't get met at the perfect moment, as planned, but at least an idea of what's going to be happening quarterly per year. Okay, and it can't be something that is always being worked on, something like this, what we're doing, and just some random blog post on a on the proposals page of their DAO. Like, it's great and outdated. Like, okay, but we need something more. We need a little bit more that's more current and that's more official. Even though it is a DAO, this should be the most official, but we need it to be up to date, and maybe a separate copy of this in a nicely formatted chart on the website or something like that. That definitely would bring a little bit of comfort and ease for the retail investor. Okay, so keeping that in mind. So from a roadmap perspective, they got work to do. Okay, let's move that out of the way, and we'll talk about the team in a second. So we're slowly zoning in on things. We're slowly getting in on that. So let's get on to this documentation. I would like to just repeat again, this is not a white paper. It's not an official white paper, but it is a Git book that has a lot of the information that the white paper has, if not all of it, and potentially more current, because it was last updated a year ago, whereas the other one was updated in the actual white paper was written in 2021, which means that it's severely outdated. Not a very good look. So I'm not going to rely on that, because then again, I might get false information. And also just keep in mind, this is a year old, and we don't know exactly what has been updated. It could have just been a small portion of it. Just understand that, we want updated information. We're going to have to take it as it is. Okay, so that's that. Let's take a look at the introduction, and we'll talk about some of these things in a minute. Bringing real world investment to DeFi. We already talked about this, the emerging market. Financial access to thousands of individuals around the world. It's a global perspective. I like that. Protocol dramatically expanding both potential borrowers who can access crypto and the potential investors who can gain exposure. So they're just trying to bridge the gap. Exactly that. Bridge the gap between traditional finance and this crypto, a new wave of crypto, is to bring these features of lending and borrowing to the crypto space. And of course, DeFi, guys, it's all about the DeFi and finding ways to bring it in. Fully collateralized, this is key, fully collateralized with off-chain assets. So what we refer to as off-chain is literally assets that are not recorded on the blockchain. It could be a fleet of trucks. It could be a building. It could be any type of assets. It could even be inventory, for that matter. It could be anything that the company owns that is physical, that is not recorded on chain, can be used as collateral to obtain a loan from the pools on Goldfinch. That's basically how it works. Okay, so just to keep it simple. Keeping it simple. Goldfinch overview. Goldfinch is a decentralized, so it's a lot of repetition, borrowing with crypto collateral loans. Participants. I'm trying to get in here with the borrowers and auditors. Okay, this is important. Okay, so what is the difference between a borrower and an auditor? Okay, a borrower is basically a participant that takes the majority of the risk. Let's put it that way for a second. A borrower is an individual. Sorry. Let me retract. The backer. Okay, the backer is the individual that takes the majority of the risk. That's the person that's going to be the first entry to provide liquidity to the pools so that borrowers can borrow, okay, and they get access to the capital that they need, okay. So that's very important. So just to backtrack again, the backers are the ones that do all the research at the beginning, in the first stages, and realize that they want to provide capital to the borrowers, right? So the borrowers put in this proposal that they need some money, they need it for XYZ. They have this capital that they could use as collateral, a building, a fleet of vehicles, whatever it is. And then those borrowers put out the proposals out, and the backers go and assess whether that proposal from the borrower is valid and is worth providing liquidity to. The backers take the first initial risk, let's put it that way, where they are taking a lot of the risk. Now, let's just kind of read this for a second. They assess individual borrower pools, decide whether to invest in them directly with first loss capital, which means that they are taking the majority of the risk. And I'm going to try to make that a little bit more clear as we go on, okay? And earn the protocol's highest yields for doing so. So as a reward for taking the first risk, or taking the majority of the risk, it means that they're obviously going to get a better reward, okay? So we have to understand the risk to reward ratio. Now, the liquidity providers, and this would be the senior pool, okay, are individuals that take less risk. They take their capital or their losses last. In this case, that they take profits sooner. They don't take as much risk, whereas the backers take a lot more risk, and therefore they take the losses first, okay? Which means that there's a little bit more of a passive feel if you're going to be a liquidity provider, because the volatility is not going to be there. You're taking less risk. What's more interesting is that the backers do all the research, and depending on how many backers get involved into the loan, based on the backers, the liquidity providers, basically that pool that is provided by the liquidity providers, a portion is allocated to those pools that the backers got into, and it's all basically rated based on how many backers. So for example, if a loan gets covered by the backers, there's a loan out there, the backers like it, they think it's a great opportunity to deploy a lot of capital in there because they're going to get rewarded from this business, from providing liquidity to that business. If a lot of backers get in, that is an indicator. That is an indicator that that loan is a good loan. That is something that the senior pool would want to get in on, because the backers being an indication that they've done their research, that they have agreed, the liquidity providers are going to want to go in and basically put fuel into that loan and provide more liquidity into that pool, giving the borrowers more access to more liquidity. But just to understand that the supply is second loss capital, which means that they are not going to be taking a bigger loss than the backers. The backers will be taking a bigger loss at any scenario, but also they will be taking less profit or less of a gain if things go well, obviously, because they are not providing that early risk. The early bird takes, a bit more of the risk, of course. So which ultimately it automatically allocates its funds across all borrower pools according to the assessment of the backers. That's a very critical statement. So as soon as the liquidity providers see that the backers got into a loan that is really good, based on the amount of backers that got in, the liquidity providers will automatically allocate funds across those borrower pools according to the assessment of the backers. So the backers have a lot of power here. They have the amount of backers that get involved basically provide a sense of an indication of security in that case, that the loan is good. Members are participants who supply capital. Okay, borrowers are participants who seek financing from GOLDFINCH. They propose borrower pools. So they put those proposals in as borrower pools. The backers go in, assess the borrower pools. If the backers get in, then the liquidity providers come in and say, wow, a lot of backers got in. Let me put more money into there so we can get more liquidity out there, or more funds for the borrower. So that's basically how it gets. It's almost like a consensus by the backers. If the backers are in consensus, then what happens? The liquidity comes in chosen by the senior pool. Okay, which pretty cool. 2 tiers here. Auditors. I've read somewhere that the role of an auditor is note that last of June 2021, the auditor role is no longer living on Goldfinch. So this concept of having an auditor, let's just read this a second, because you might have some documentation that you may find on an outdated white paper that might still have this. In the past, it required a human level check guaranteeing against the fraudulent activity and earn rewards in exchange of conducting this work. Okay, so an auditor would go and audit the loan and make sure the business is good. But since June 2021, all that responsibility is put on the backers. So all this auditing should be done by the backers when they're auditing the borrower's proposal in their borrower pool. So basically, the backers are all doing what the auditors were doing in the past. I'm assuming, because that's, as of 2021, we transitioned right into the backers doing a lot of the legwork, figuring out whether it is a valid scenario, a valid business opportunity to make some APY. Okay, so that's important. There's a bit of an update here. How GOLDFINCH works. Again, a little bit more information. Borrowers currently off-chain lending businesses propose deal terms for credit lines. We talked about that. Just to kind of like the borrower's business use their credit lines to draw in stablecoin specific USDC from their pool. Borrowers then exchange USDT for fiat currency. Okay, fine. So we went through this already. At the end of the day, we know that there's certain levels. The borrowers and the different categories, the members, the borrowers, the backers, the liquidity providers. There's a relationship all in that, and it has a lot to do with consensus. In order to determine how to allocate capital from senior pool, the protocol uses the principle of trust through consensus. This means that while the protocol doesn't trust any individual backer or audit, it does trust the collective actions of many of them. So the more backers that get in a particular pool or backers that get into a particular loan, more of those senior individuals will come in and provide more of that liquidity as a ratio, increase the ratio with each. Basically, it just adds more to that pool as a ratio. Okay, so that's a pretty cool stuff. Honestly, it does look really interesting, that whole dynamic and the way they've created a consensus mechanism amongst participation, which keeps it a very decentralized, unbiased type of scenario. Junior and senior trenches, we kind of talked about this already and how that works. Senior pools receive a FIDO tokens, an ERC token, so there's a dual token system here, but this deep dive is about the GFI token, but we still have to integrate the fact that the FIDO token represents a position that grows into USDC exchange values. So ultimately, they can swap them over for USDC. Anytime the backer can use their NFT to redeem their specific portion of the available repayment. So one thing that we have to understand is this whole agreement, the entire details of this agreement is written on an NFT type of contract. Okay, which is important because that way there's no ambiguity as far as the agreement goes. Okay, so backers receive an NFT representing their deposit when they supply capital. Okay, so this is important. The NFT tracks the amount that was supplied and how much of it has been redeemed. So definitely the NFT is not an image or a JPEG, which is something that I've been talking about on the channel for a significant amount of time, is that the JPEG as an NFT that most of us know of, was just proof of concept. In this case, what they're trying to do is use the NFT technology to not store an image, but to store, let's say, quote unquote, an image of the transactions or the agreement or the relationship itself of these borrowers and lenders. Okay, so it's a way of doing a non-fungible token, but recording of these types of informations that happens on the protocol. This allows the protocol to ensure that no one redeems for more than their protocol share of the total capital repayments as they come in. It's a way of using the ledger in an NFT, a non-fungible token way. Okay, so this is an important thing. We're starting to see projects use NFTs for other than JPEGs, which is again a very important thing to kind of educate mass adoption, educate the retail investor of what an NFT actually is. It's not just a JPEG. Okay, so let's just move on from that for a second. Liquidity. This is a little bit of an infographic, what shows you what happens. The liquidity comes from liquidity providers, senior pool, and obviously from the backers. Remember, the backers take the majority of the risk. The senior pool takes the least amount of risk. The backers basically do all the research. The auditors are no longer there. We rely on the backers to do all that audit to make sure everything is good. They provide a bit of liquidity, and once these dudes right here, the senior pool, sees the amount of backers getting in, a direct proportion will be allocated to provide more to the borrower pool, and then the borrowers come in and they start borrowing, and so on and so forth. And based on the APY, everybody wins, everybody earns, and gets what they need. Okay, so pretty good stuff. Tokens, there's the GFI, so dual token system. Most of us are interested in the DFI token. Is the core native token. It is used for government voting, auditing, staking of all rewards, community grants, staking backers, all of this. So the utility is full on here, guys. Everything that you can expect from a token is here. The FIDO token is probably something that's more on the back end side of thing. It is a token that represents liquidity providers depositing to the senior pool only when the liquidity provider supplies to the senior pool. They receive an equivalent, almost like a liquid staking type of thing. They receive FIDO. Okay, so what happens is they put in the capital, they receive FIDO as a token. FIDO can be redeemed for USDC in a GOLDFINCH DApp at an exchange rate based on the net asset value of the senior pool, minus 0.5% withdrawal fee, and so on and so forth. Okay, so this is how it goes. Very straightforward, very clean. No funky stuff there. Key borrowing incentives, governance. Of course, the more you own of the token, the GFI, you get rewarded, of course, and also you get basically, as a decentralized autonomous organization, you're able to participate in the DAO. That's about it. Very straightforward there. Decentralized the overall daily operations of the organization itself. Unique entity check, of course, this is another thing how we can use NFT technology. The UID is a non-transferable NFT representing know your customer, know your business, and basically US investors accreditation verification on chain. It's a standard of which now we basically, if you want to get verified as an individual, this is the new standard that they are using. And you have to be able to be willing to provide that information as an NFT, your personal information. So it's a unique entity check, UID. That's basically what you got to go through. Okay, so if you're okay with KYC and all of that good stuff, you're of course that's what's going to be required. Ready to learn more? Feel free to go check that out if you want to get into a little bit more detail. So really, the overview was very useful here, very clear, no ambiguity. I don't see how a retail investor couldn't understand this with a few runs through a read. Not bad. So we got a glossary of terms, which we already kind of went through, mechanics, borrowing pools, all this kind of good stuff, junior trench, all this kind of things can be run through again if you want to go into a bit more details. The auditor role is no longer in action, so I'm not sure why they still have that there. Backers obviously want more information on how the backer works and all of that, feel free. And that's about it. Incentives, let's see, backer incentives, senior pool mining, rewards, and all of that, what it means to be a backer, and in the incentives, backer rewards. Of course, you're going to get rewarded for providing liquidity to a pool, and you're going to be rewarded significantly more if you're taking risk. And this is what they're just basically trying to say here. Senior pool, less rewards, however, less risk, letting the backers take the risk. Unique entity check, we talked about that already. The staking, we talked about this already. A rewarded target, unlock schedule. We're going to talk about the tokenomics in a second. Let's see what else we got here. I'm trying to do this all live with you guys. Liquidity and LP withdrawals. So liquidity, there's going to be a fee for sure. 0.5% default process. Okay, the governance, participation. Anyone can participate in governance by making proposals. Okay, snapshot on the votes. You need to be a token holder to be a council member. That's about it. There's nothing more than that. You want to be involved in the DAO, you got to be a token holder. Tokenomics. Okay, this is where people start to get excited here. Okay, so what's important here is to understand that the reality is tokenomics, especially in a new organization, sometimes it's really rough. Okay, we got to understand that. And what comes to my mind is the fact that the majority of the tokens are early and future team and early supporters. Look at the size of these two categories of individuals. Now we're talking about they were talking about 50% of the token supply going to early supporters and early and future team. So what I'm seeing here is that you remember all those VCs in the beginning? Well, there's a good chance that they're into this. They're in this category. Okay, they are in this category, which means that as tokens get unlocked, and of course the unlock schedule has to be very clear here, or else it's going to be very difficult for the retail investor to build a bit of confidence in this. Because if it's going to take, let's say, 20 years for this capital to be unlocked, then it's not that big of a deal. Because we know that, okay, fine, they're going to own 50% eventually, but as they get unlocked, they might sell some, they might sell half, or whatever. They might, put some into the market. And of course, that supply that enters the market will put a bit of sell pressure and dilute the value over time. But as long as the supply doesn't outdo the demand, and the demand basically outdoes the supply, the price will go up. We get this, right? And especially as we enter bull run status and we see, cryptocurrency Web3 basically take over, we can see a lot of those tokens basically be getting absorbed. But the issue is there's a lot here to account for. We're talking about 50%. And then you have auditors, which I'm not sure where that went, because auditors no longer exist, apparently, according to this documentation. So what happens to the 3%? Liquidity providers. Okay, this is, I guess, the liquidity providers, the people that provide liquidity to the loans. But again, who are these individuals? They get 16.2% over time. These are the backers. So this is the senior pool. This is the backers. They get 8% in total. The liquidity over time are going to, obviously, the liquidity providers are going to earn a lot more. It's more of a passive income type of thing, less risk, and so on. Contributors, again, 0.7. Who are these 0.7? What do you mean contributors? Are they early, or who are they? Private investors? I have no idea. That's not enough. Okay, it's not a big amount, but still. The treasury, I'm assuming, usually this means that the treasury, this is allocated for the DAO to take full control of, and they can decide on what to be spent, what it should be spent on. And below, you're going to get a little bit of that information as to where. Now we have Warbler Labs, 4.4%. This is a third party or an existing organization of some sort that belongs within the GFI or the GOLDFINCH ecosystem. A bit of ambiguity here there, but we can definitely look into it. So liquidity providers, early liquidity providers to the program, retroactive liquidity. Look at this, a lot of people getting in at 16.2%. These are people that provided early liquidity to and they're gonna want their fair share back, right? They're doing this as an incentive for APY. They're not doing it for free. The same, the backers are going to be earning. The liquidity providers are going to want earning, so will the backers. The auditors, I'm not sure what's going on with this, because I mentioned it already got removed. The borrowers, sure, the tokens are set aside for borrowers for when and if the community decides to implement a future distribution system for borrowers. Not sure what that's about, but sure. Contributors, again, that's only a small, now this is 0.65 and here we got 0.7. There's a bit of a discrepancy there, so I'm not sure how and what's going on there. I don't like that when numbers are not perfect, but it shows a lack of attention to detail. Is allocation to contribution contributors who have already significantly contributed to the community and protocol. Okay, Discord, so it's like a little bit of help or a little bit of an incentive for people. I don't know, community. again, a little bit of nonsense there, but it's not much. Community treasury, sure, this is probably governed by the DAO, is allocated to community treasury, which community can decide the use purpose of such as grants. This is a problem, is that I don't see any marketing here anywhere. So grants, okay, that's good for developers. And so adjustments to protocol distribution mechanics, coverage for potential loan and default. So if somebody defaults on the loan, they can pull from this to kind of make everybody whole. Okay, that's totally fine. But reality is I don't see anything with regards to marketing, which is a bit of an issue. Okay, so we'll keep on going down. Early and future team, of course, self-explanatory. 3-year unlock schedule, 6-month lockup, and 12-month transfer restrictions. So reality is that there's a 3-year lockup, and all within initial 6-month lockups. That's confusing, but still okay, that's fine. Or I just feel like what's really missing here is a chart. Really, from a retail investment perspective, you need some sort of graph to show the emissions. So you know, that's a bit of a problem. You know, this, it's hard to mentally keep track of all of this without seeing an emission schedule that is represented on a graph. So that's that too. So basically, subject to 3 unlock schedules, 3-year unlock schedules, all within initial 6-month lockups and 12-month transfer restrictions. So 6-month lockup and 12-month transfer restriction. Okay, I don't even know what that means, but sure, fine. Wearable Labs, 4.4% is allocated to Wearable Labs. I have no idea what this is. A separate organization spun out of the early Goldfinch team that will contribute to the Goldfinch community and broader DeFi ecosystem. The tokens are subject to a 3-year lock schedule and with an initial 6-month lockup. Okay, so the cliff, and a 12-month transfer restriction. I'm not sure what they mean by 12-month transfer restriction. That's a term that I don't really see very often. Early supporters, okay, again, very similar. A lot of people to help build the protocol. Guys, these guys are going to want to get paid. You know, there's a lot of capital going into this, in these two categories. And again, no clear, nice chart or anything like that we can rely on. Now, we can find that information. We can find a better way to represent that information by going to CryptoRank. And you can see right here, we got the same type of schedule happening, the distribution and the unlocks. But what's good is that we can actually see this in a little bit more clarity as to what's happening from Genesis. So TGE is the Genesis date, January 2022. Basically, nowhere on the white paper, on the website, was I ever to find the Genesis date, which means when the actual contract was deployed. Now, I'm assuming that it was January 2022. Okay, let's just make sure. TGE date, yeah, right here, which is great. Let's get rid of these pop-ups that are annoying. And then we can see that after this date, which is May, which we are right now, but as of May 2024, you can see that there's going to be some unlocks happening here for a linear unlock for the next, little while. And it has to do with this category. And this category is this one right here, early and future team. So they're going to be getting paid up until the end of 2028, which is a bit of time away, and we're going to have a slow emission schedule bit by bit. The cliff after here, we got this group as well, and this group is this group right here, and it's the contributors. Okay, so this is something, again, this represents about 50% of the pie, which means these guys are still getting they're getting paid over time. And we also have the linear unlock here with the cliff and so on. The green, which is this portion right here, the Wearable Labs, guys. So we're seeing a lot of the team, the early investors, still getting paid after the, within these unlocks. All of these got already unlocked, as you can see. Okay, so which is good. Who else is left? These dudes right here. Now, of course, all of this you have to understand that they're still putting in work. They still need to get paid. They still need to eat. I get it. And this is the name of the game. It's still a very young project, which means that, there's still a lot of work to be done, and we're going to need a team behind it to actually do some work and get this thing going and keep on going and being successful. So we got to understand that we got to share a little bit of the wealth here. What else do we have? A timeline? Do we have a table? Okay, that's pretty cool. We have a chart. There we go. This is what I'm looking for. Those are the charts quite interesting because we can see Flight Academy rewards. Okay, that's only 3%. The big untracked GFI, this right here. I wish this was a little bit better. Yeah, because I can't really early adopters. Okay, we can see that the Flight Academy, who cares about that for a second? Early liquidity providers, look at that. So from about here, we're getting a lot of them unlocked steadily. And look at the early supporters, fat unlocks coming right into the end, the tail end. As you can see, we're in the majority, in the thick part of the unlocks coming up for Goldfinch. So this is something we got to consider here, guys. Okay, the unlocks, they're definitely going to put sell pressure over time, but the only thing is that as we enter the bull run, again, prices go up. The demand is much higher than the supply, will still go up. So that's one thing we've been seeing Goldfinch kind of do its thing in the last little while. It's been doing great. We'll talk about the price action in a second. We're really just trying to figure out tokenomics for the moment right now, because we want to get a true understanding of what's happening. There's about, I think, 60 something percent of the tokens still need to be in circulation. I wish that was right here, ready and available, but I do have it calculated on that infographic that I produced for you guys. So let's see if there's anything here that I can see right now, but I don't see anything. Unlocked, 47% unlocked. Okay, vesting fund over, maybe in the overview. Let's see what's going on with the overview. If we get a percentage of how many tokens are in circulation versus the total supply. Okay, it doesn't matter at this point because I do have that figure for you if you guys want to know it in a second. So just stay tuned with me. All right, let's move on. That's the tokenomics. We see the vesting. We see everything happening there. What else do we have? What else could we be concerned with, right? We have all the wallets, the current wallets. The majority of them are right now in the treasury, in the protocol, 20%. We have 16% in the contract. I believe that's going to be for the team and all those individuals that need to get paid, and then the rest of them are somewhat small wallets, 3% here and there, and then we get into a very small micro wallets with not much happening. And you can see that a good chunk of them after these right here, these two main ones, we're pretty much done. And we're also talking about the Goldfinch protocol, GFI Ledger, Gate. We have exchanges for sure, MEXC, and so on, a couple for BitGet, but still they don't even have that many if you think about it. So but those exchanges require liquidity. What's this one? Other account, 8% right here. I'm sure it's tied up into a contract. Again, you got to read those contracts. You got to check them out if they're CertiK verified, and so on and so forth. So pretty good, not bad. Okay, so at least we're not seeing a majority of an issue here. We just have to know that these are locked up in a wallet. Okay, they're locked up in contract, and you got to be okay with that. The fact that the treasury is going to be holding some of these tokens, and the team and the early investors are going to be getting a chunk of those unlocks in the next little while. All right, so let's keep on going down. Let's see what else we have here. Do we have the team? Anything to do with the team? I did check them out on LinkedIn. Oh, is it here where I can find the team? No, this is straight to the email. Forget that. I don't see anything happening here. We did see a couple good stuff on the on Medium. That was not bad. We got some information there. We got some what's it called? Some partnerships with Cello, which is good. Cello Alliance for Prosperity. We got another one with Alloy. These are all part of the same type of narrative. So I like these relationships that they're building. Lockup Free Goldfinch investment is here, powered by Allo X. These partnerships are what are important ultimately, because they actually are strategic, right? It's not like they're paying them or anything. They're working together to scaffold each other to the next level. So our centralized accredited protocol becomes a member of the ecosystem of organizing supporter prosperous communities, and so on. So this is really good. If you look into it, guys, it's not bad. They're getting some good alliances there, which is very, very useful for small businesses to scaffold one another. So that's good. What else can we look at? I'm trying to see if they have a dedicated team, contact, careers, GitHub dev, no, government's white paper, nothing to do with that. So let's take a look at what I found on LinkedIn. So we have Blake West. Okay, he's a dude that has some real experience, which I appreciate. Let's see if we can see more here. Okay, that's that. We get a little bit of what's happening with him here in the last little while. I'd like to just go down to his experience. So one thing that concerns me is this. Director of Heron Finance. Okay, and if we looked at Heron Finance, it's definitely part of their ecosystem in some sort of way. Okay, it's all over their socials on on X, and they are an SEC registered robo advisor to build on the blockchain. So there is some sort of registered, given some sort of licensed or whatever the case may be identity here with Heron Finance that they're trying to integrate with Goldfinch, which is in a very unregulated space. So I don't know if it's a strategic thing that they're trying to do here to have a separate identity that kind of backs or works alongside Goldfinch, which could be a very strategic, smart thing to do. Again, maybe it's not something that they're really willing to be clear on at the current moment, which I totally understand, because of course they're trying to separate the wild west of crypto with the very regulated markets of traditional finance. So could this be their way of still dabbling into both and maybe kind of balancing it out? I'm not too familiar, but just understand that Blake, which is right now, he is the CTO and co-founder of Goldfinch. He's involved with Heron Finance, obviously full-time at Goldfinch, also full-time and co-founder and CTO of Warble Labs, which is the company that basically I think it's 4% of the tokens are going to go to them, which again, I don't know why. I don't know what relationship exactly do we have so many identities that are being bounced around here, and why that this type of scenario ecosystem is necessary. And again, they might not want to completely be transparent about that strategically. I'm not sure, but the DAO should be familiar. And I guess the retail investor, as they start doing research, is it straightforward? We shouldn't have to be private investigators to figure all of this out. It should be very clear. But again, I'm not sure. He was a senior back-end engineer at Coinbase for 2 years. That's great. Great stuff there. So he knows his way around the back end for sure. And then a software engineer at Hint Health. So a lot more experiences below, but we'll just keep there with the top few. And you can see software engineer, lots of experience here in all of that. Okay, and then let's see if we can get access to somebody else, the next guy in line. If I scroll up, maybe sometimes he's here. Let's see suggested. I don't see anything. Let's see who else is here. More, let's forget the more. Let's go activity, experience, no, not experience. Read up, show projects, volunteer, recommendations, anybody else. I know there's other individuals that we could probably get our hands on. The problem is that unless you're connected to them, you won't really get their direct feed. So the next guy that we should take a look at is Mike Saul, the co-founder at Goldfinch and Heron Finance. So another scenario here where we see Heron Finance, we see Warble Labs and Goldfinch, and of course that relationship there. There's a lot of commingling and intertwined relationships here with the three of these organizations with both co-founders. So although this could be a strategic thing, it would be nice for it to be clear and transparent how this is the case. And I'm sure that is, but it's not very clear on any of the documentation anywhere that this relationship is strategic in any way. And of course, from a retail perspective, from a retail investor perspective, it kind of does show a little bit of an issue here of a lack of transparency. Okay, so let's just be clear about that. Also, some great experience here, head of product analytics at Coinbase. So for 2 years, definitely some experience. And what else do we got here if we keep on going down? Data science, product manager at Adobe. We have business analyst. So, the accounting department at Wharton School. So we got some, finance background. We definitely have some crypto background, that we have some experience across the board within the space. So that's pretty good for both of them. I think they're both decent individuals that could definitely lead the project in the right directions. Being part of Coinbase in the past definitely would give them the insight going forward to make Goldfinch a success. So that's that. I'm liking that. I'm liking the team so far, and everybody else below them at the end of the day, is obviously should be a valuable member. But the two founders in my book are the leaders, others, and we should just focus on them for now. If you want to get into a little bit more, feel free and dig around. Okay, what else do we got here? We got GOLDFINCH. We got a lot of good stuff here. Let's take a look at we took the look on chain. We took a look at that. Let's get rid of this. We went on the team. The team is good. No roadmap, as I mentioned. Let's get rid of this. We got lots of stuff happening here, so good stuff. And the website, you know, overall was pretty good. It's a bit active, a bit distracting, but it's pretty cool at the same time. Lots of it's tasteful. Let's put it that way. It could be a bit distracting, but you know, it's creative and it's interesting. So yeah, it passes. It does a good job. And of course, let's look at some of these details right here. We got GOLDFINCH, a market cap. So let's talk about the market cap. $250 million market cap. So it is still a small market cap. We have to understand that the real world asset narrative is still overall a very small market cap. Now, if you're going to look at it as a DeFi project, and you can see that CoinGecko does define it as belonging to 4 major categories. DeFi, actually 5 if I'm not mistaken. I would say 4. Decentralized finance, lending and borrowing, because honestly both of them are somewhat the same. Real world asset narrative, okay. Coinbase Ventures portfolio, and Andreessen Horowitz portfolio as well. A16Z. They're very common. Okay, this is one of the biggest VCs out there. So reality, 3 major ones, 3 major narratives that we got to watch out for. Both, all of them are hot narratives, especially the real world asset narrative. And DeFi is not going anywhere, right? We're just getting started, in my opinion. Things are settling in that narrative, so it should be a good project to represent the mix of real world asset and lending and borrowing, or DeFi in general. So that's not bad. It's an Ethereum based project. Obviously we went on the Etherscan that does socials, guys. We'll talk about the socials while I show you my infographic in a second to sum things up. We're doing good. Now we just got to understand, and I think my my infographic will do a little bit more justice. It's listed on a lot of exchanges already, as you can see. You can get it pretty much anywhere. A lot of the major ones except Binance, right? We're obviously on yeah, a lot of the Coinbase and so on, but except Binance, which means that it could still get listed on Binance, and we could still get a little bit more volume and exposure via Binance. But we saw one of the VCs, Coinbase Ventures, they're on it, so this is why we're seeing a little bit of the volume. BitGet has a lot of the volume right now. 46% of the volume is going through BitGet. So interesting stuff at this current moment. Not bad. All right, so what else do we got? I think it's time, guys. I think we should just go right into that infographic. I know you guys, I'm going to make that available to you guys in the future. I'm going to be putting it on the socials, so feel free to follow me on the socials, guys. The links are in the description below. So this is my infographic that I prepared. Basically gives you a summary of my verdict. You know, the verdict is ultimately that GOLDFINCH is super bullish. It's got lots of good things going for it. There's some things that need a little bit of work, okay? And we'll kind of touch upon all of that in a second. Ecosystem. Okay, so, you know, I've been thinking about the fact is that some projects don't really need an ecosystem, right? Some projects, you know, they are focusing on their internal utility rather than ecosystem itself, which means, you know, it could be that it's not really applicable. At this current moment, I don't see you know, GOLDFINCH trying to build its ecosystem. We're not seeing applications being built or alongside or really coexisting in a very transparent way where they're trying to scaffold each other within an ecosystem that is under the umbrella of GOLDFINCH. I really don't see that just yet, but I do see a big utility. I do see a lot of utility within their current internal ecosystem, which this is what we need to focus on, is the utility of their product offering, what the SKUs that they're offering, community governance, participant incentives. So if you're getting involved, providing liquidity as a backer or whatever it is, you're going to be rewarded with a very decent, generous APY, which is, you know, the way a lot of individuals nowadays in crypto are earning passive income. Community grants, participant incentives, of course, backer staking, auditor votes and staking. So a lot of things that could provide opportunity here, but a lot of it stems from 2 very clear categories: governance and rewards for providing liquidity. That's basically it. Okay, so generally 10 out of 10, very clear, very concise, and obviously a lot of good opportunity in an up and coming narrative. The roadmap, guys, there is nothing really there. There's nothing. Unfortunately, we got an outdated one. We have a very community-driven roadmap based on the DAO, which I respect, fine, but it needs to be active. It needs to be kept up to date. You need something. And still, I really don't like roadmaps that can be changed and so on. We need something that, even though it is maybe very broad and zoomed out and not very specific, at least tell us where the team is focusing in the next little while. Where are they allocating their time and their resources? And that for me is super, super important. We do have the team. It's Stellar, West, and Sol are employees at Heron and Warble Labs. A bit of a confusion there because Warble Labs is a full-time employee. They're both full-time employed there, so I'm not sure what's going on Heron Labs, and they're earning a bit of rewards based on coin distribution. Is there a conflict there? What's going on? What is the relationship? So that's a bit of an issue, but if you look at them, they both have a lot of experience and they're well equipped to run this team to all the way to the upside. Guys, lots of good talent there that could do very well, but again, a bit of transparency there with regards to their engagements. Let's keep on going. We'll talk about that in a little bit more as I summarize. Socials, guys, the socials are a bit iffy. Okay, they have 64,000 followers, 831 followers for the last 30 days, but still down 90%. They were getting a lot more traction in the past. Okay, so what happened to the traction? Now, what happened to the traction is pretty much what's happening in crypto in general. So we can't really be too hard on them at the current moment because everything in crypto right now is taking a bit of a hit, particularly altcoins. They're not really getting a lot of the volume that they should be getting in the interest. Again, the retail investor is not there, right? So we got to understand if we want the retail investor to be there so we can get the followers up and the engagement and all that mass adoption going, we have to make sure that we package this product and this service and this crypto Web3 software solution. We have to package it up in a very a decent way for the retail investor. So right now, this is not a good look. Now, to go alongside of this, there is a bit of an issue on the Discord. Okay, now there's an issue with regards to the team being transparent with one of the loans that were issued, and it seems, guys, I'm not an expert at what's happening there, as I tried to reach out, number one, to the team, number two, to some of the community members, and on the Discord, and I waited and waited for days and didn't get a response from anybody. But from what I was able to understand from the communication on the Discord is that the members are not happy with the fact that there's no transparency as to what happened with a deal. And apparently one of the deals, one of the borrowers in lending, one of the borrowers didn't follow through or something like that. And I think it defaulted and so on. And they just want some transparency because you know what's happening. The backers that are expecting APY are potentially in a loss maybe with this scenario. So again, I'm not saying that I know exactly what's happening here, but I do see some stress in some of those community members. And what could we boil this all down to is that the community is not given the transparency they need to be assured, and that is a bit of a problem when you're talking about team dynamics. This is why I'm saying, okay, maybe it's a 9 out of 10 for the team, because the team should be up in there. Now, are they too busy with working at Heron Finance and Warble Labs and so on and so forth that they can't respond to people's requests and get on an AMA or get on the Discord? Could that be an issue? Like, this is where we're at right now, because the social engagement is a bit of an issue. Now, another thing that raises a bit of a concern for me with regards to the team and social engagement and the tokenomics compiled is the fact that there's no real clear budget for marketing. And of course, marketing is a very broad topic because it could include communications. It could include somebody that's there, a communications officer that's going to go on the Discord and on the Telegrams and on the socials and communicate with the community exactly what is happening and address their concerns. Don't create a scenario where a small issue becomes a big issue because the emotions of the retail investor starts to rally up and they start flooding really badly, and then what happens, you're going to get a sell-off. So what we really need is some of that communication. I'm not trying to make it a big deal, I'm just trying to say that's what's happening at the current moment. And you can see that they've created 7x posts in the last 30 days, and they're up 600% for just 7 posts, which just tells you that in the prior 30 days these guys were very inactive. And then it kind of, goes back to the fact that they don't have marketing dollars that are clearly, allocated, and they do not have the team, are they not responding to messages and so on. So see, you're basically getting a bit of a picture here, a picture of their lack of engagement with the community is definitely there. Okay, so that needs to be fixed. The retailers expect communication, and maybe sometimes too much communication, but I feel like maybe they backed off a little bit too much. Now the tokenomics, let's get into that. Vesting schedule is fully diluted by 2028. It's not a fair launch. We got a lot of VCs earlier on. We're seeing a lot of token unlocks coming out. 50% of the tokens are allocated to early supporters, including the team, and so on and so forth. We have to understand that those individuals are getting their unlocks bit by bit up until 2028. The good news is that's a few years. However, we have to understand that in the up and coming bull run, the demand will outperform the supply. Right? So if it's a bullish project, we will see an overvalued price in the top of the bull run. And that means that when the bear market comes in, expect GOLDFINCH, GFI, to come down significantly, because guess what? All these people that are going to get their unlocks during the bull run are going to hold while the price goes up. But then as soon as the price hits the top, VCs, no matter who they are, they will be taking profit. And it's very likely that all of a sudden the profit taking happens. The retail investors will panic out of their positions and capitulate, and we'll see the price come down significantly hard. This is not a true representation of what GOLDFINCH is about as far as tech and so on. It's just a matter of a fact of tokenomics and overall risk to reward. The reality is, on the top of the bull run, there's going to be a lot of tokens that will be released that belong to early investors, and if the project does well, based on the supply and demand, the demand outperforming the supply, people will take profits. And this is one of the things that we have to be very aware of. Don't have a long-term strategy in a lot of these smaller projects. Have a long-term strategy, but be prepared to take profit, to defend your initial investment, to defend your gains, defend your capital, because ultimately it's very, very likely that we see GOLDFINCH fall down like every other altcoin comes down approximately 90% in the bear market. So we keep that in mind. Okay, guys. What else do we have? Partnerships are great. Just understand that we got to be clear about how great they are. The backers, the VCs, Anderson Horowitz and Coinbase Ventures, these guys are heavyweights. Again, are they going to be hunting for gains or capital? They're getting their capital back at the top of the bull run for sure. Be prepared for it. Partners, Cello Alliance, AlloX, Heron. Again, that relationship with Heron needs to be clarified. I don't know what's going on. They call them partners, but meanwhile they're employed. That's not really a partnership. You're employed. It's kind of weird. So we need to be clear about that. Is it a conflict of interest? Is it a strategic move? What is the strategy? I don't know how to deal with that, but there's a lot of other partners there that make it 10 out of 10. And even if Heron Finance is a strategic move, it's still a decent move. If you think about it, they're regulated in one way and unregulated in the crypto space, because there is no regulation right now. It's impossible to get regulated. So the reality is, it's like they're dabbling in both sides of the field, which is good, because then when things do get regulated and there's transparency, at least we know they are basically ready to go and get things together. So Heron Finance, I just want to know the strategy. That's all it is. And I think retail investors deserve to know a little bit of what's happening there. And if we look at their exchanges, great exchanges, BitGet, Bexy, Uniswap, and the list goes on. Of course, we're missing Binance. Does Binance ever get on there? Maybe, maybe not. The reality is that's all we need is to see a 10 out of 10 is the next major player, Binance. So if you're waiting around for that to happen, for that listing to happen, we could see a little bit more volume. We could see a little bit more traction with regards to mass adoption in the retail investor by getting onto Binance. Of course, one of the major players out there, why not? So that's where I'm going to leave that one little extra point there for a Binance listing. Just know that listings are usually good. In the short term, they're volatility, but in the long term, they're good. So based on my overall impression here, we do have a scenario. Of course, the date is more current than this, but the price of when I did the deep dive might have fluctuated. Just keep that in mind. The trading volume is a bit of an issue given the fact that I would like to see a little bit more. I'd like to see at least 10%, 10 to 15%, but sometimes it doesn't happen. And you can see this is not exclusive to Goldfinch. This is a market-wide type of scenario where a lot of volume, low volume transaction happening at the current moment. So we have to understand that this is something that is market-wide, not specific to Goldfinch. The supply represents 65% of the total. Okay, so this is what I wanted to tell you guys earlier is as the rest of the tokens enter circulation, understand that the only remaining amount is 35%, which means that there's not that many. The rest of them that are going to be unlocked are for the early investors. But the amount, as you can see based on the graph that I showed you, is a bit of a chunk. So we got to be prepared, and obviously just keep in mind the incentive of them holding these tokens are quite high because it's a DAO. They want to have voting. They want to have voting power into the DAO. So why would they be selling, especially in a trend that we are moving for the bull run to the upside? So it's not. I have a feeling that the incentive to hold is a lot higher at the current moment than it is to sell. But just understand, people want to eat, especially if they're their devs and their team members and so on. They're going to be selling off a bit at a time to live, basically. So just understand that. And the unlocks that are happening, keep an eye on it. So a little bit more, my verdict, a little bit to add to this. It's part of the DeFi narrative, real world asset narrative. It's a real world lending and borrowing scenario. TGE is not listed. Guys are going to be very, very critical on projects nowadays because number one, they don't provide the information that is required for the retail investor. So I'm going to be coming down hard on them because really, if they want mass adoption, if they want success, it's not good enough that the people that are part of a DAO or have been there from the day one, they are the only ones that have clarity. That's not going to achieve mass adoption. So they need to have all the information ready. They need to have graphs, charts, TGE, genesis dates, which I'm finding that there's a trend that there's no genesis dates being provided in clarity. In the about, in the main paragraph of the introduction of the project on the white paper, whether it be a Git book or whatever, there should be a sentence saying this project was created and deployed at TGE this date. Okay, so that's very, very important. Vesting schedule could use a graph showing emissions. Guys, I had to go to a third party, right? What's wrong with the team providing an exclusive or a valuable? Now, some people could argue that third party is better, but it's not the point. Yeah, you can verify via third party, but the team should be responsible to show that information to make the retail investor very comfortable. 50% of the tokens will flow through the early stakeholders. Just keep it at that. Guys, I made that very, very clear. The emissions is very important. Fully diluted in 2028. General utility is DAO governance and staking, providing liquidity. Plain and simple. You're going to stake, you provide liquidity, you earn. If you hold the token, you get involved in the governance. Fairly simple. All the other little add-ons are basically subcategories of these two main concepts, okay? The relationship with the Heron needs some disclosure. The relationship is a little bit everywhere here, guys. I don't know what's going on with all those other companies that they're fully employed on as well. Are they diversifying their time way too thin to the point that they're not focused? I'm just going to be critical here because who else could do it other than the retail investor? So if we're going to be critical on them, we're going to say, well, they're dabbling into three organizations at once. Now, is this, again, a strategic thing? Maybe they treat them as one, but strategically they're trying to separate different parts of it. I don't know, but some disclosure needs to happen there. Lead team members have engineering and finance experience, but also are involved in other business ventures, like I mentioned. Okay, that's about it. What do we do here? That's all I'm saying. Make your decisions. No formal roadmap. Unfortunate, guys. There's nothing there. Really, where is the team allocating resources and efforts? That's something that I would like to know. Governed by a DAO. That's sometimes a scenario where a lot of the times the organization hides behind because it's a DAO. It's decentralized. Roadmap is not really provided. Why? Because the DAO governs where the direction goes. That just means that you have to have a little bit more diligence into keeping a roadmap that is constantly being updated. That's about it. And the fact that it's a DAO doesn't mean that it can be neglected that way. So I'm still looking forward to a transparency there, regardless if it's governed by a DAO or not. Marketing budget. The marketing budget seems to be overlooked. There is nothing happening with the marketing budget. I would have expected a little bit more with regards to marketing. As far as that goes, the marketing, you can see there's nobody communicating, neither on the Discord or on X or anything like that. There needs a little bit more effort there. Unfortunately, it's definitely overlooked. So that's that. Discord needs some attention. The community is very unhappy at the current moment with the lack of transparency from the team. They're asking for information about one of the transactions. I see some of the emotions heating up there. Is this a red flag? I don't want to make a big deal out of it. I want to make a small little molehill and turn it into a huge mountain. I just want to make it clear that this is something that needs to be addressed quickly, and let's just get it done and over with, because the actual team is decent, and I'm sure they are very capable of answering all questions in a very professional manner. Okay, so let's move on from there. My overall verdict with regards to price target. Look, it's a very difficult thing. These targets, guys, they're just hypothetical, right? Like, I don't know exactly where this is going to go. Nobody has a crystal ball to tell you where this is going to go in the future, but there's a couple of ways that we can assess this. We can use competition, if there is, and if there's any player out there, or we can use, market cap in general. We can get an idea of, what qualifies a middle type of target, a modest target. A $500 million market cap? Sure. That could be very possible. It could be maybe more than that. That's very possible, depending on the supply and demand. Nobody really knows. But what I do know is Maker, which is the biggest lending and borrowing protocol out there right now, using over collateralized assets, crypto assets for that matter. In this case, they are the main player out there. So let's forget the real world asset narrative, because that's definitely a hot narrative. In fact, GFI could do very well based on that narrative. But if we were to compare GFI to Maker, and let's say GFI catches up to Maker, we're looking at minimum an 8x. Okay, that would be a very good target, a $30 target. Now, could it outperform Maker based on the fact that it's part of a hot narrative? Yes, it could. But why were we going to take that risk to assume that that's very possible? Let's hit this target. Let's have a competitive based target strategy at the current moment. Let's get there. Once we get there, we can reassess and see how it's going with the narrative, see how this narrative is going. And then we can start defending gains, because it is up 8x, which means you've already done very well. You can trail up some stop losses, take a bit of profit, let the rest run. But there's no real sense of trying to make a bold prediction without knowing exactly what's going to be happening, because there's no previous price action, there's no history to support this narrative, and to be honest, all we have is the main player, which is right now Maker DAO. So at the end of the day, $30 price target. We'll reassess if and when we get there. I think that's a very modest target for GFI, and ultimately in a bear market, retraces, comes back down, we buy the dip during the next bear market, and we see this thing come up for another leg where it starts to catch up and start to get into a larger market cap. Is it going to reach a really, really large market cap in one bull run? A lot of the projects do not. It takes multiple bull runs to reach those multi-billion-dollar market caps. So we got to really understand that. Although I'm bullish, we have to understand time frame. We have to understand one bull run. How many bull runs are we doing here, and how much could it achieve in one single bull run? I think that if we can do a 10x, 10x, something like that in one bull run, it is still a very, very healthy target. Guys, I give it an 8 out of 10. There's a bit of work still need to be done, a bit of transparency, a little bit of ambiguity from the team, and so on. So definitely some work to do. Guys, I know you're here to talk about charts, so let's do that. Let's take a look at what's happening with the GFI chart. All right, so we got this chart. The chart's looking good. At least we're holding some horizontal support right now. It's not bad of a scenario. We got a nice impulsive move from previous price action, a nice sideways consolidation with lots of volume into here. We got a nice impulsive move up, and now we're kind of consolidating. Why I would say this is a nice consolidation is because we can see a bit of market participation building right into this mid zone, and we do see a nice little bounce right off of some horizontals and some emotional levels where emotional investors got in. Previous price action should suggest that this is a little bit bit of a gap where we could expect emotional individuals based on the liquidity right around this level. So it's not bad of a zone. Now, you can see that ultimately this V recovery make things a little bit complicated, because where do we put our stop losses? How do we get into a defensive strategy here, at the same time expect a continuation up? Now, it does look like an inverse type of pattern, right? We can look at this as an inverse head and shoulders. Maybe it's not even the cleanest, I wouldn't say, but what I do like is that at least we came down, hunted liquidity, we came down to test the bottom, we got a nice V recovery, straight right back up, and we're testing previous support for support again. So that's quite interesting. Let's get some lines going on into here, and then we'll look at oscillators and so on. You can see that this level, and I'm going to push it up because if we include the wicks, it doesn't really make sense, but if you put it up here, it kind of does, and I'll show you why. In fact, maybe what I should have done is used a nice horizontal line so we can look it up with compare it to the volume profile. You can see here right into this level, we do have a massive amount of volume that's building over time, but as soon as we reach this horizontal line, it kind of dips down to the point that we have a bit of a volume gap right into here. So I'm going to put a red box so we can identify the importance of this empty space right into the volume profile, because really if we fall below, guess what, we're coming straight back down to the levels that we've came before. The thing is that last time we came down here, we got a lot of algorithmic buy orders that bought the dip so quick that we got a V recovery. Everybody bought in at this level. They had algo orders on exchanges. It got up and the price went up, and in fact made a higher high in comparison to this previous price action, which shows us that we could be potentially looking for a reversal right around here. I'm going to thicken this line to emphasize its importance. Why? Because if we fall below the $3.50 mark, it's very likely that we're going to start testing the bottom of the volume gap and, you know, looking for that support. We do see that we have some support zone based on the 200 daily EMA right here that's slowly trailing up. I have this line in here hypothetically saying that, look, if we continue in this path, in this trajectory, as the price goes sideways, eventually the 200 daily will flatten out. Okay, we'll flatten out, and we'll probably use this horizontal as support at about $2.50. So I'm going to kind of remove that and for a second, so that we can have a bit more clarity. And you can see that based on the volume profile, we can even make this a little bit better, right? We can put it down here. We can kind of introduce a bit more price action, see what's going on, just to kind of a little bit, yeah, that still makes sense. In fact, I would be more comfortable bringing it down. And now what I'll do is just to kind of make things as accurate as possible, is I'm going to kind of go back and exclude that previous price action and say, you know what, it's not bad. This is not bad. Okay, it's not bad. So what I'm going to do is also bring this down so we can identify that this also comes here. But I also want to identify the fact that this level right into here is a lot weaker. Okay, so what I do is double down on my red boxes, and it comes, you know, darker red. And that way I know, like, guys, if we come down to these levels, we might get some support, to get support on the top of this volume gap, but we could also fall right through and come down to about $2.30. So between 250 and 230 is not a bad buy opportunity based on the 200 daily, based on the bottom of the volume gap, based on previous price action looking left, this top. And if you look down here, we got a bit of bottoms, a bit of consolidation, but mostly it's about this top and the volume that is represented by the volume profile. Okay, so that's that. Us staying above here is very bullish. We need this to become a bull flag. Now, I'm not even looking into oscillators yet. Soon we'll be looking at the synergy signal, momentum, and trend oscillator. So stay tuned for that. We're going to see what's going on there, what they're telling us. But we can see at the current moment that we are getting a bull flag. We got one leg to the upside, consolidation, and another leg, which is pretty good. That means that ultimately there could be a bullish bias for this consolidation at the top of this volume gap, and we can see market participation building into here, like I mentioned. Why do we have so much supply and demand right here? Because the market is interested. Something's happening there. We got emotional people into that level that could be expecting a bounce to the upside. So our invalidation is this: if you are planning to go long, okay, and I wouldn't even do this on leverage, if there is leverage, because I don't even remember if we can get a leverage position on GOLDFINCH on the exchanges. But at least in spot, what you could do is get into a position, even right now, and build into this area, right above this thick yellow line. If we fall through the thick yellow line, just understand it starts to get a little bit hectic. We could start using these wicks for support. We don't know if they are. We can use this bottom as support. We don't know if they are. But the likelihood is that if we come down to about $2.50, $2.30, the probability of getting support with some certainty increases a lot more. So this is where the confusion comes in. This is where TA is important, because if you can't have a clear invalidation, you have to identify where you're starting to take too much risk. We made that higher high right into here, which is very nice. Could this be the beginning of a change of structure? Higher high, higher low. Maybe we come down for a bit of a wick. Who knows? We come down for a higher low. We could come down to this level and get a bounce at any moment. But if you bought the dip right here, who cares if we come down a little bit, get a V recovery and continue to the upside and start expanding all the way up? That's all very possible. So what I do like is to identify zones of which I am comfortable taking risk. Taking a bit of risk around here. Let me make this green so we can identify that as a very important space. And obviously all the way down here, guys, if it happens, these are the two zones. And you know what? I'll put one into here, because you know what? I wouldn't mind DCAing here just in case, but then double down here, get in heavier down at this level, because you can drag your average cost down. Now, this would be a DCA spot buy type of scenario that I would be comfortable getting into, and your entries would be supported by 200 dailies, previous price action, top, bottom of the volume gaps, a lot of good confluence down here to get in heavier, and still remaining in a bullish stance at the current moment above $3.60 is still very decent because of this bull flag type of scenario. Now, we can see the volume is decreasing. Now, this is market wide. It's not just GOLDFINCH. We see a lot of volume coming down in the crypto space in the last little while, as we do have a bit of fear that Bitcoin could be slightly overheated in the next, in the last little while. Definitely pumping up to those really high levels really quickly gives us a bit of, uncertainty that we could get a retracement. We do see that there's an opportunity to get a green expansion to the upside right here on GOLDFINCH. So I'm going to make now the oscillators a little bit bigger so that we can, focus on them. And I'll make this one smaller for now. You can see that we had a red expansion that slowly tapered off to the point that, it looks like now we should be looking for a green expansion to the upside, similar to this. Okay, similar to what happened here. As soon as we start seeing green expansions, we had a red moment with these red dots, lots of confluence for red. Even though we went sideways, it was still very red. The trend was still our friend from all the way here. You know what I mean? We're still okay. We could still come down for another little dip in the short term as the volatility is still pushing down. The orange line is still pushing down. What I would like to see is the volatility come down to oversold right around here, more or less. Do a U-turn. Get the momentum, which is the purple line, starting to move upwards. Then I will trade the volatility to the upside alongside the momentum, the purple line moving up, volatility moving up. And really what you're trying to do is trade the volatility in the same direction as the momentum. And of course, waiting for the expansion, a nice green expansion right into here, giving us confidence that we're moving up, that we're getting a nice pop to the upside with green dots all the way down here. That's what I'm really looking for. And that's going to start giving me the scenario that the bias is to the upside and we're looking for another move to the upside. So we're still very early based on the daily time frame to the point that we should be considering starting to deploy a bit of capital. Now, if we get into the 4 hour, I'm going to remove all this painting that I got going on here, this artwork, so that we can make a bit of clarity here, because it doesn't relate to the 4 hour. It may apply a little bit, because you can see that the volatility is already oversold. I think the daily has a little bit more to push it down. So let's assume that it could hesitate right around here. And you can see that we're in the chop zone on the momentum. Guys, I hate when the chop zone, the momentum is in the chop zone, because that means that we're not getting volatility for the price action, right? We want this in a direction. Who wants to trade the range, such a tight range? That's how you get wrecked. So what we really want is to see the purple line get a direction, either me moving to the upside or to the downside. Then we can trade the volatility in the same direction. If it's coming down, if the purple's coming down, we'll short every time the orange line gets oversold, and we'll start overbought, we'll start shorting to the downside. If we see the purple line moving up, we'll start longing every time the orange line gets oversold down here, and we'll start longing and longing to the upside. Now, if we look at the trend here, on the 4 hour, you can see the trend also is not giving us much of a confirmation. The expansions, in fact, are getting tighter and tighter. Look how big these expansions were on the 4 hour, and we're getting tighter and tighter. So what does that mean? That means that we're due for an expansion any moment. We're due for a move to a direction. Now, the direction at the current moment, based on risk to reward, is very healthy to the upside, given the fact that we're above this invalidation right here of this thick yellow line. So understand that my bias at the current moment is that we expand bullish. Now, if we expand bearish, it's about protecting protecting your capital by cutting your losses short and, you know, reaccumulating down at these levels like I mentioned. So on the 4 hour, no edge whatsoever, but on the daily we did get a bit of bullish divergence into here. You can see that the price action was coming down while the expansion waves were moving up. We got the green dot suggesting, hey, let's wake up, let's get going, we're getting confluence, and boom, we went straight to the upside. Now we're kind of going sideways with a bit of a bearishness on the trend, where we do see some red histogram bars and EMAs crossing to the downside. So I'm a bit iffy on this in the short term. Like I mentioned, I would like to see it hold support right here on the thick yellow line. If we fall through the volume gap, we got to understand they could fall right through and we have to start DCing. So just understand that in the immediate short term, DCing right into this level with, let's say, 20 to 25% of your allocation is not bad. Then come down, DCA a little bit into here, and then come down and deploy the rest all the way down this level. Now, if you only are able to fill this bag, it's okay. You got 25% in, and you're going to get a nice pop to the upside. You're going to take profit. And in the meantime, with the rest of the capital that you didn't deploy, whether it be 25, 30, you got to decide how much you want to get in early, because if you get in too early and it falls through, you're going to have less capital to DCA, unless you put a stop loss underneath here and then reaccumulate all that capital down here again. This is a very viable strategy. However, even if you only get a portion of your portfolio filled at this level, it's okay. There's lots of projects, there's lots of entries, there's lots of opportunity there in the crypto space where we could make up for it, and we can find great opportunities, good green price action to the upside. Guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm, getting the channel going. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one. And don't forget, buy the dip.